Should staking rewards be taxed by the IRS as income? What do you think? I want to break that topic down. Now, the IRS has issued a revenue ruling which states that it should be taxed as income at the fair market value upon day of receipt. And that's related to IRS Revenue Ruling 2023-14. Now, what's a revenue ruling? A revenue ruling is not the law. It's not tax law. Neither is it a tax regulation. Okay, so there's two different higher priority guidance from the IRS. So a law is set by Congress. The regulations are rules that the IRS feels are necessary to enforce the law, and these are regulations. They have a more rigorous approval process. Underneath that, there are several other types of guidance that the IRS offers. One of them is a revenue ruling. So this is basically saying this is how the IRS is going to handle these sort of situations as they come up in the future. And their revenue ruling on staking is that it's going to be taxed at the fair market value in US dollars on the day you've received them. Now, they do give allowance for a concept that is called constructive receipt. That is to say, sometimes when you get staking rewards, there is a delay before you can actually do anything with them. And that delay is not constructively received until you can actually take them. However, constructive receipt does not require that you actually take them. That'd be very clear. A lot of people think, well, if I just don't take them, I won't be taxed. So that's one issue. But what if you disagree with that position? What arguments could you put forward? Now, there's a very famous court case that's getting bantered around a second time by Joshua Jarrett related to Tezos staking, and the Proof of Stake Alliance has put a lot of money behind these court cases to try to break this open. And the logic goes this way. Hey, a staking reward is my token basically creates more tokens by allowing it to be used for validation purposes. And that in a sense, their analogy goes this way. A bread baker is not taxed when he takes the loaf of bread out of the oven that he's created, but rather he's taxed when he sells the loaf of bread. So that's the analogy. Now, does that make sense? Now, the IRS and their revenue ruling, which I have here in front of me, the IRS loves to, instead of quoting the law, they love to quote a tax court case, Glenshaw Glass. And the reason they quote this tax court case is because the judge in his ruling wrote really strident opinion that IRS loves to hit people with in order to scare them. The judge said, instances of undeniable ascensions to wealth clearly realized and over which the taxpayer have complete dominion is included in gross income. So that's kind of like a very strident saying. I'll say it again. Instances of undeniable ascensions to wealth clearly realized and over which the taxpayer has complete dominion. Well, that sounds pretty strident. It sounds like an ascension to wealth would be an increase in wealth. So a staking reward would be in there. Now, the problem here is that this statement, though powerful sounding, is just prima facie false. How is it false? For example, one example of how it's false is if you are given $100,000 by someone. You as the recipient are not subject to any tax at all because it's a gift to you. However, to read this sentence, clearly it's an ascension to wealth and it's clearly realized, but it does not mean it's an increase to income. All right. So this sentence by itself is overstating the case. Now, the second issue that comes out is a staking reward income? What is income? Income is something that you get from other sources. Whereas the analogy that I gave you of the baker already has the bread, the flour, the butter, oil, whatever else goes into making the bread. He has the oven and he makes it himself. All right. So he's a creator. It's creators create things, but they are not subject to tax until they're disposed of, they're sold. And that's the question. Is staking reward creation or is it a form of income? Let's have some more analogies. If I put $1,000 in the bank, I might get interest from the bank. The bank is paying me interest, right? So my income is from them. So yeah, that should be taxed. If I own stocks and I get a dividend for my stock, it's the company that's paying me a dividend as a portion of my reward for being an owner. That's actually income, right? But in this case, with staking reward, is that really a creational event or a distribution from some other entity that's using your coins? So I think this is going to have to be teased out in court. Some people have said, "Hey, I agree with the Joshua Jarrett approach that staking rewards should not be taxed until I sell them." And can I claim that on a tax return? The answer is yes, you can. I would highly suggest that you disclose that on Form 8275. I want to be very clear. It's Form 8275, not Form 8275R. R is where you report something that you're doing that is against the regulations. And remember, this is a ruling. We're not going against regulations. We're going against the rulings. So if you do make that choice, you should do it that way. But, I think this is a topic that the courts are going to have to decide on. And it's very significant to the whole future of how staking rewards are done. And I think if you have concerns about your situation, would like to discuss it and have it handled in a professional manner, you can certainly contact us. Go to our website, cryptotaxaudit.com, go to the contact page, schedule a call with me, and we can discuss how to handle your situation. I wish you the very best. And remember, make money, pay taxes, make more money.